Hello, I apologize that it's taken me quite a long time to get you the last 4 sections of the exam. I had a couple of obligations that I had to take care of, but I'm back. So today I'm doing section 5, supporting your small business clients. And in this section, we'll be covering paying vendors, exploring workflow errors, small business transactions, and vendor credits. So payments. What are the 2 ways that you can pay vendors in QBO? Well, you can create the bill and then select pay bills, or you can go directly to the expense or check. I'll show you that in 1 minute. How can a customer pay an emailed QBO invoice via credit card? So they receive the email with the invoice on it, and then they would then select the review and pay link. They would enter their payment details, and then they would select pay. So let me show you the 2 ways to pay vendors. So you come over here to the plus sign, and under the vendor section, you have bill. Now you can select bill. That's where you would create the bill. Now, obviously, this is on account. So then when you go to pay it, let's say 30 days later or the next month, you would then select pay bills, and all your open invoices that you owe will pop up, and you would select which one you're paying. Or you can directly just pay it by selecting by selecting expense or check and select the vendor. Workflow errors. Identify a common workflow error that may cause duplicate expenses in QBO. Well, if you create a bill to record a vendor expenses, we just saw, and then you create a check for that same expense, or create an expense for that same expense. So you can't create a bill and then create an expense or check for that same expense. So it's one or the other. So that's one way you could have a duplicate expense. Another error that might happen is, what are the 2 features usually used to identify possible errors or issues? So if you're in QBO and you know your client has made a mistake somewhere and you have to fish through all their transaction to figure out what happened, the best way I like to go about it is going through your transaction journal. So you'd go to reports and you'd bring up your journal for a specific time period. So if you know it last month you've balanced everything out, then you would just bring up that month's journal and look through it and see if you see anything that might have been duplicated. And then you also have the audit log. That also helps you drill down everything that transpired for that particular time. What would happen if a client using the sales on account workflow created an invoice, and instead of receiving a payment against that invoice, they added a new deposit categorized to an income account? So what are they saying here? So they're saying that you did an invoice, which an invoice is what? An accounts receivable sale. So you're acknowledging the revenue and you're billing your client. So you didn't get cash for it. It's not a sales receipt. An invoice is where you're billing your client. So you created that invoice. And then instead of receiving the payment against that invoice, which would be received payment under the client column, you instead just went to new deposit and put it in a different income account. So what would happen here? These 2 things. One, your accounts receivable balance would not be accurate because you're going to still show that money's owed to you, although your client did pay you. And the other thing is your income account will be duplicated. So we saw here an example of duplicated expense. This would be an example of duplicated income. So the income account would show duplicate income because you showed the income the minute you created that invoice. Because with accrual accounting, when you acknowledge that you are billing your customer, you immediately acknowledge the revenue, even though they haven't paid you. So when you created that invoice, you created the revenue. So that's why you would have duplicate income. Because then when you got the money, you created a new deposit and put it in an income account. So you're showing 2 revenues when you really only earned 1. Undeposited funds. So we've talked about this in a couple of videos. I hope you all have a basic knowledge of what this term means. Here's 2 questions from this section. What are the steps when using the sales with payment customer workflow? So you would create an invoice, and then you would receive payment to that invoice, which would be deposited to undeposited funds account. The last step is you have that monies and you would create a bank deposit. So 3 steps here. Create invoice, receive payment, and that payment would directly be associated with the undeposited funds account. When you have that money and you deposit it, your 3rd step is to create that bank deposit. By posting to undeposited funds, you can create a single bank deposit from multiple payments, making it easy. Now you see italics, that lets me know this is a fill in the blank. So it makes it easy to match your bank register with your bank statement. When receiving a payment, you want to make sure, that's with italics, the deposit account is undeposited funds. Vendor credit. So vendor credits are designed to account for any return of products that you've already purchased on account. So it's the opposite of customer credits. You're getting credits from the vendors, your suppliers. So when a vendor credit, when a vendor credit is recorded by a QBO user, what are the two ways to apply that vendor credit? One, you can apply it to an existing bill, or two, you can hold on to it and apply to a future bill. So you can take your credit and use it to an existing bill or a future bill. What are two ways to access the vendor credit screen in QBO? One way is the expense center, which on the left-hand navigation side, you would select expenses and then go to new transaction and vendor credit. The second way is you'd go to the plus new button and select vendor credit. Deposit transactions. When should you add other funds to this deposit grid in a deposit transaction? When an employee reimburses the company, when you receive a tax refund from the IRS, or when a company doesn't record income using sales transactions like invoice or sales receipt and wants to record deposits directly to an income account. Your client wants to transfer money from their checking account into their savings account. Where should they start this process? You'd go to the plus new icon and you'd select transfer link. And then they would have two you transfer from this account to another, just like you would on your online banking. Estimates. So what are the 4 status types that can be assigned to an estimate in QBO? You would have pending, accepted, closed, or rejected. I know I showed you one similar to that in that same screen, so I'm not going to go over that. But pending, accepted, closed, rejected. Which features help streamline the ordering process once a customer approves an estimate? Well, you would create purchase order from the estimate. Create purchase order from that estimate. Credit memo and adjusting entry. When a QuickBooks Online user wants to automatically apply a credit memo transaction to a customer invoice, the automatically applied credits checkbox must be turned on in which area? You would go to your accounts and settings, go to your advanced tab, and select automation. And the last question, which journal entry can your client not create? That would be adjusting entries. Adjusting entries are created by the accountant or bookkeeper. All right, so those are the topics that I covered in section 5. I'll get section 6, 7, and 8 out to you as soon as possible. Good luck on your exams. Please, as you know, I always ask if there's any questions you'd like to add or topics you'd like to add them into the comments section so others can benefit from your knowledge or maybe even mistakes. Good luck on your exam.